Assalamualaikum. We are from Group 5, Class 3B. Today, we would like to present about tax planning. My name is Siti Aisyah binti Ismail. These are my group mates, which are Umaira, Farah, Siti Nur Aisyah, and Haida. We start with Aida to present whether to choose investment tax allowance or pioneer status.
Investment tax allowance or pioneer status, which one is the best? RSP Sdn Bhd is a manufacturing company that participates in a promoted product or produce a promote product, and it is a capital intensive kind of business. Pioneer status offer an exemption from chargeable income tax on 70% of statutory income for 5 years, and the remaining 30% is taxed at prevailing chargeable income rate. Investment tax allowance ITA offers 60% qualifying capital expenditure incurred for a period of 5 years to be utilized against 70% statutory income, while the 30% balance is taxed at prevailing chargeable income rate. In this case, RSP Sdn Bhd must choose investment tax allowance in order to minimize the tax liabilities.
RSP Sdn Bhd is a new manufacturing company. A manufacturing company is said to have commenced business when it embarks on the production of manufactured goods. RSP Sdn Bhd is expected to incur approximately Rm 40 million for the purchase of machinery and another Rm 500,000 for staff remuneration costs prior to the commencement of the manufacturing process. The staff remuneration cost is an allowable expenses. However, it is not deductible as it is a revenue expenses incurred prior to the commencement of RSP Sdn Bhd and will be added back to the business income resulting in higher chargeable income. However, once the business commences, RSP Sdn Bhd may obtain tax deduction for the revenue expense incurred. Therefore, in order to minimize non-allowable expenses, RSP Sdn Bhd should incur the revenue expense of the staff remuneration of Rm 500,000 on or after the commencement for the revenue expenses to be deductible against the adjusted business income. By doing this, it may result in lower chargeable income, hence lower income tax payable. For the purchase of machinery of approximately Rm 40 million, it will be deemed incurred on the commencement date and will qualify to claim capital allowance since it is a qualifying expenditure incurred prior to the commencement date. The acquisition of asset will be given capital allowance if the assets fall into the ambit of plants, machinery or industrial buildings as stipulated under Schedule 3 ITA 1967. Therefore, the company may claim a 20% initial allowance and 14% annual allowance. The capital allowance will be set off against the adjusted income of a business to arrive at statutory income.
We recommend RSP Sdn Bhd to purchase the asset by outright purchase machinery, which is acquired through cash, since the capital allowance can claim based on the full cost of qualifying asset amounting 40 million ringgit. Except passenger vehicle are restricted to 15,000 ringgit or 100,000 ringgit. The company RSP Sdn Bhd will be entitled to claim initial allowance and annual allowance on the first year, and for the subsequent years, the RSP Sdn Bhd can claim annual allowance until the full relief is given for the qualifying capital expenditure. However, if the RSP Sdn Bhd choose to purchase the asset through leasing, then the company is not entitled to claim capital allowance on the leasing asset because there are not full ownership of the asset. If a company acquired through leasing, the company is entitled to claim the full leasing charges as revenue expenses if it is incurred wholly and exclusively in the production of income of the company. Therefore, RSP Sdn Bhd will be entitled to claim an initial allowance of 20%, an annual allowance of 14% in the first year, an annual allowance of 14% for subsequent years, because the asset in this case is plant and machinery. The interest expenses is also deductible in computing adjusted income. The company can minimize its tax liability, although claiming through this asset will be more advantageous. Outright purchase, which is cash, is still the best option since it can reduce the chargeable income.
Next, we move to interest restriction, RSP, financial institution, and TSB. If the company wants the whole deductible on interest, therefore the RSP company must borrow full amount of money that the company needs for their business. Next, TSB must borrow money from the financial institution, not from RSP. If the company wants to borrow money, they should choose the cheapest option that is available so that no unabsorbed interest would be permanent loss.
Assalamualaikum. My name is Humaira binti Muhammad. My matric number is 2021855936. I want to discuss about the tax planning on disposal of fixed asset. Number 1. After several years of use, RSP Sdn Bhd is anticipated to sell some of the machinery, which will result in a significant profit on the sale of assets with a very high resale value. For the company that disposes the asset to a third party, it can minimize the tax liabilities if disposed of after more than 2 years of acquisition to avoid the clawback of capital allowance. The tax authority is empowered to claw back the capital allowance claim in previous years and treat it as a balancing charge in the year of disposal. This will result in the disposal value being ignored in the computation of the balancing adjustment. Based on the disposal of machineries by the company, RSP Sdn Bhd have yet to decide as to whether to dispose of this asset to its subsidiary Inara Sdn Bhd, which is a loss-making company, or to an unrelated company. Number 2, the company should transfer the fixed assets to its subsidiary Inara Sdn Bhd in order to reduce its tax liabilities. When referring to the transfer control provision, it is generally subject to the control sale provision of the Act. In this case, the assets will be deemed to have been transferred at the transfer's tax written down values of the transfer, and no balancing charge or balancing allowance would consequently apply to the transferor. Thus, the disposer will benefit the disposer. Furthermore, Inara Sdn Bhd is still entitled to claim annual allowance based on the original acquisition cost of the assets. Since the Inara Sdn Bhd is forecasted to obtain a current year loss of 800,000 ringgit annually, RSP Sdn Bhd can benefit the loss to offset the balancing charge due to very high resale value. When the company obtains the huge balancing charge, this will lead the company to increase in its chargeable income and indirectly pay more on tax. Number 3, in summary, RSP Sdn Bhd should dispose of the machinery to Inara Sdn Bhd because they no balancing charge or balancing allowance arise on the disposal.
RSP Sdn Bhd is a resident company in Malaysia. It has forecasted minor losses in the first 4 years operation and gain a minor profit in the 5th year. Inara Sdn Bhd and Top Sdn Bhd are both related companies to RSP Sdn Bhd, as the percentage of shareholding owned by RSP are 75% and 73% respectively. TSB Sdn Bhd is not related company and not eligible to group relief, as the percentage of shareholding owned by RSP Sdn Bhd is below than 70%, which is 60%. RSP Sdn Bhd is eligible to claim 70% current year losses in Inara Sdn Bhd and vice versa. For Top Sdn Bhd, its forecasted aggregate income is approximately 1 million ringgit per annum from year assessment 2019 onwards. In addition, the surrendering company would be Inara Senja Berhad, which sustained annual losses of 800,000 from 2019 to 2021. RSP Senja Berhad can surrender if it incurs losses to top. As already mentioned, the claimant company has defined aggregate income for that year assessment.